Is it bad to buy low and sell high? We're all told to do this since I swear we've been born, but let's get into why this is actually a really bad thing to do and a very expensive thing to do. Okay, there's three reasons I want to go over why buying low and selling high is really expensive. And I want you to think of it that way. Is this an expensive strategy or is this a really inexpensive deep value strategy? I'm going to say deep value. So first of all, what is low, right? When you buy low and sell high, how do you know what low is, right? You only know what low is relative to what the price has just become. But the market fell 30 months from in the dot-com crisis, right? So depending on what market you're looking at, the NASDAQ 100 fell from March 2000 and then continued falling for 30 plus months. S&P 500 fell for 30 plus months. So all that period, you could have been buying low and then buying lower and then buying lower and then buying lower and then buying lower. So this idea of buying low and selling high only looks good in hindsight, right? When you can look back at a price chart or look back at some numbers and go, oh, I should have done that. But we're not grocery shopping here, right? You're not looking for something on sale. That is the wrong metaphor. That is the wrong approach to use. I know we're taught that all the time. Hey, the stock market's on sale. What a bunch of crap. Right? So the first thing is buy low, sell high. Is that a bad idea? It is, because we never know what low is until we look back quarters later or years later. And so it really is timing. We're really going up against probability math because we don't know what low is until we look back over time. Okay, that was the first thing. The second thing is, what's high? High according to whom? An outdated valuation like price to earnings? That hasn't helped anyone in 2 decades. Price to book, price to sell, price to EBITDA. I mean, these are old ratios that may not matter anymore. So the question is, what is high? And if you start answering that question based on your own feelings, like, oh, it's too high now, it's got to fall. Like, to me, those are really scary comments when I hear people say them, like, oh, the market's so high. According to whom is it high? Or XYZ is high, or ABC is high. So the second part too is buying low and selling high dangerous is we don't know what high is until after we look back again. So there's and you don't want to be timing. And look, I run a trading course and I tell my trading clients, our job is to not trade, right? Just because you take a trading course doesn't mean you should be trading. I know that sounds kind of weird, but think about it, right? You don't want to have to do a lot. So the second part is, what is high? And most of the time people look at themselves and how they're feeling about what they own and go, oh, now it's too high, I'm going to sell. But that's really timing. So you're timing to buy, buying low, not knowing what it is, and you're timing to sell, that's high. So it's a really bad idea to buy low and sell high. We're not looking for discounts, right? We're not looking for good buys. And here's the difference, and here's my third point I want to make. You want to buy things that are already working. You want to buy symbols that are already going up and to the right. Because think about this. If a symbol is going up and to the right, buyers are coming in. Every time the price goes higher, more buyers come in. And of course, it's not going to look straight like a nice line. It's going to have the zigs and the zags and move up and down. But think about what's going on with that stock. Buyers are coming in, right? The stock is being held by the strong hands, by the bulls. You want to own symbols, right? Where the bulls are in charge. It's going to make you more money over a shorter period of time. And isn't that part of it? And I'm not talking crazy small cap pot stock, crypto, blockchain, whatever symbols, right? You don't have to get crazy symbols. You can see huge companies that are $100 billion market cap trending higher, and they can be up 100% a year. It happens every year. So the key is to buy something that's already doing what you want it to do, which means you have to understand how to read a price chart, because you want to be able to look at a price chart and go, oh, it's doing what I want it to do, right? It's doing what I want it to do. You buy those symbols. And once you start buying the symbols that do what you want them to do, then your money starts growing, right? Then you start getting the portfolio and the certainty and the consistency that's going higher. But it comes back to, oh, I've got to actually know what I'm buying, which means you have to be able to understand how to read a powerfully simple price chart. And when you do, literally your whole life changes, not just your investment world, because now you can start using that idea like, oh, what is working in my health? What is working in my relationship? Like, let's do more of what's working and let's do less of not working. When you buy low with the hope of selling high, that's what's going on. You're buying hope. I don't want any hope to be involved with your portfolio. I want probability to be involved. And when you buy a stock that's falling with the hope that it's going to go up higher, and I mean falling like it's going down in time, right? Not as if it's going up and the lows are getting higher and the highs are getting higher. That's an uptrending stock. And so when you look for things that are on discount or really cheap, there's a reason why they're cheap or on a discount, and you want to avoid them, because when you do, you keep the instability out of your life. You keep the trauma and the drama out of your life. And when you buy investments, when you buy symbols that are already working, you're literally inviting instability and certainty and consistency. Hope that helped, guys. Again, this was about is buying low and selling high dangerous or expensive? And the answer is it absolutely is. If you like this video, you're going to love my other videos. Also, too, in the description, there's an absolutely free course called Clarity and Control. And what I've noticed in my 2 decades of working with people is those are the 2 things they want. They want to be super clear about what is and is not working, and they want control back over their money, especially people over the age of 50. They start noticing, wait a second, I don't want to have to work for the next 30, 40, or 50 years. I need to take my portfolio and I need to really make sure that it is growing and I have that control back. So check out Clarity and Control. It's in the description. You can click on it. You can find the link there and get access to it. It is absolutely free. Thanks, guys, for being in my world, and I will see you on the next video. Okay, bye.